In this video, I'm going to be covering some reasons why the luxury watch market is much worse than you think. And I'm going to be including one reason that no one is talking about that I've personally used over the years to gauge where the market might be going, what's actually going on, what dealers are doing, and this one thing that dealers are considering when either buying or selling a watch with you is, in my opinion, a major determining factor on why watch prices are where they are today. But guys, before you do that, please do not forget to check out chronograbs.com, where you can buy and sell watches at zero listing fees and 0% commissions. Over the last few months since we've launched, we've had thousands and thousands and thousands of people sign up. People have been trading watches. There's also an instant checkout section where you could buy a watch at a substantial discount from some of our dealer partners. So you want to go over to chronograbs.com, sign up for a free account, and check it out now. So guys, if you watch these videos and you're a diehard watch collector, nerd, or fan like myself, especially over the last 5-6 years, then you know there was a major market surge and then a pullback, and now watches have kind of come down to some type of equilibrium price. Now, I've talked about this really ad nauseum in the past, so make sure to check out some of my other videos as well as some of the videos of other creators out there who has really covered this throughout the time. But where we are today, and this is important to note because the next things that I'm about to share with you are going to make a lot more sense, is that we're at a point, pre-COVID, as well as maybe in the period between 2009 to 2012, where the demand for watches, albeit was growing a little bit, was somewhat stagnant in a sense. Keep in mind, we had every magazine, every journal, every content creator pushing watches and saying there are these alternative investments. As we've seen, this may have not been the case with some rare examples, but regardless, watches and the demand for them has pulled back. Now, it's also important to keep in mind that because there was such demand that was increasing seemingly every day during this time period, you have so many more entrants to the watch market, more dealers, flippers, traders, private collectors that wanted a piece of the action. You had big companies, you had companies that were raising capital from private equity as well as venture capital to build out these platforms and marketplaces, unlike mine, chronograbs.com, where it's entirely self-funded, and it's something I'm doing for the watch community. But regardless, you saw all of these new competitors enter the market. Now, in normal economic circumstances, you would say, wow, it must be more difficult to sell a watch. Well, that wasn't true during the surge that we saw over this time period, but now it's created a situation where the margins are dwindling. And to make matters even worse, we have things like the tariffs, specifically for the U.S. market, that have been enacted, adding significant increase to watch prices, right? With watches, especially Rolex, AP, Patek Philippe, with these watches already having pretty slim margins compared to some other brands like a Girard-Perregaux or even a Vacheron. Now you have kind of this perfect storm that's been brewing of more competition, less supply because they cannot be imported from other countries where they don't favor, pre-owned goods in the same way that Americans do. Think Japan, Hong Kong, and other parts of the world. You have other types of situations like this that are adding up to this really tense scenario. Now, the name of the game for watch trading and dealing has always been return on capital and capital allocation. It's might not be of surprise to many out there, but for some, this may be of a surprise. But many watch dealers, especially traders, people maybe you would find, maybe they have a website, maybe they don't, but they got into watch trading because it was the best use of their capital. These are expensive items, and for dealers to be successful and bring home significant returns, historically, they've had to have a lot of capital. But not only that, they've had to make sure that they would allocate it appropriately. They would have to look up their historical data, see what watches sell quickly and predictably, and as well give them the best return on their capital for a period of time, notably a fiscal year. And so that's why you see so many dealers, like, I'm just saying this as an example, doesn't necessarily ring true for them, but Bob's Watches that started with just trading pre-owned Rolex. That's why you see so many dealers just focus on these predictable blue chip brands because they know, hey, if I can if I can get a return on this capital, let's just say that I would invest in this one watch from a business perspective. I don't preach that watches are investments unless, of course, you're in the business. Let's say you can return 30% per year net after all expenses are paid, after you pay your employees. They would be okay with that because their alternative is to look at the alternatives, look at the bond markets, look at things like equities, look at the stock market. And, if the S&P is averaging, let's just call it 12% returns per year on average, give or take, well, they can beat the market. They have to put in work. They have to manage and run a business, but it makes sense for them to do it. But that takes us into a period that we're seeing right now where you have, certain stocks like NVIDIA that are up almost 76% over the last 6 months. You have other stocks, AI stocks, tech stocks, ancillary companies that offer different products and services related to this kind of AI surge that we're seeing in the United States. And when you look at something like 76% return on 6 months, when a dealer sells a watch and he gets that capital back, he has to kind of make a choice. Now, I'm not saying that this is all dealers, and some may treat it a little bit differently, but I think it's increasingly so, and this is kind of the point no one's talking about, is, when you look at these stocks, hey, I could have put my money in NVIDIA 6 months ago, got a 76% return, or I could have put my money in this AP or this Rolex, and maybe at the most, I would get a 60% return over the year, which is still a phenomenal return, but they have to do all the work. They have to process it. They have employees. They have to take the chance of risk, fraud, sell in the marketplaces. There's so many things that they have to do. They have to work and grind all day on the Facebook groups. And I'm not saying that, people shouldn't work. I myself am a fan of work. I've built businesses, Delray Watch, Chronographs, others. I've helped countless other businesses through consulting throughout the years. But it's just something really to think about, the best return on capital. And it really is forcing the dealers to think about that. And this is really echoed and validated by the shrinking inventory sizes of companies out there. This is a metric that I've always tracked because it's important to know what competitors are doing when you're building your own pre-owned watch business or any business for that matter. And it also gives you some insight into what is going out there in the market. As a single dealer, it can be difficult to really, put your finger on the pulse of the market because you may be trading in watches that others don't. You may have a bit of a niche. You may have this kind of loyal following like we had at Delray Watch with all of you out there, and thank you for all the support over the years. But you get the idea. There's a little value add over than just the commoditized industry that watches really have become, which is based on price. And the dealers today are looking at things like different crypto and different returns on their capital, and it's starting to make less sense for them to grind it out, compete with the others, to try to make, a very slim margin on a watch like a Rolex because it's so competitive right now, as well as the supply is down, the demand is down, when they could just put their capital in index funds or put it into different ETFs for AI or crypto and get better returns without having to lift a finger, answer calls, deal with inquiries, warranty claims, fraud, insurance. And so if you look out there in the market, you can see that, your favorite dealers, the top dealers, those that a couple years ago would have 3,000, 4,000 watches, they just don't anymore. They might have 300 or 400, and some of the smaller dealers that would maybe have 50 pieces in their inventory have now gone down to maybe 20 or 30, but higher cost watches that they can try to get a bigger margin on because it's going to sit. It's not going to sell as quickly as a $3,000 Seamaster or $4,000 Speedmaster. And so the decision today has no longer become for watch dealers, hey, which watches am I going to put the money in to get the returns the quickest? Instead, it's which watches can I buy at the biggest margin or can move the absolute quickest to just keep, circling through it, right? Get certain Oyster Perpetuals, get certain Datejust, get the Daytona, make their quick $500, or maybe if they got lucky on that day, $1,000, they had to fix the watch or something like that. But they're just looking at other investment opportunities when we just see other things that require almost no work just going up. Now, I'm not advocating for this for dealers or others, or, I'm not trying to predict any of the markets here, whether it's the watch market or whether it's the equities or any other types of investments. So this is not investment advice. This is just what I see happening, is that dealers who got in the business of selling and trading watches because it was the best return on their capital are seeing currently other ways to get a better return. And this is shown by their shrinking inventory sizes. And so what do I think this really does for us as collectors or you as collectors? Maybe you want to buy a watch, maybe you want to sell a watch. Well, right now is probably the worst time to sell a watch. Now, I think that, if you're thinking about this and you're like, well, this doesn't make sense, right? This should be a great time to sell a watch because, there's these tariffs and there is a bit of a shortage of supply in a sense because there's not new supply coming in. And so that some people may be thinking this, but when it comes down to it, much like, looking at the primary, right? The brands are increasing their prices every year because their cost of doing business has gone up. They're selling less and that's shown by their lack of new models or significant changes in the watch models today. Go to the watch news sites. There's not a lot to talk about from your big known favorite brands. And so, dealers or those trading in watches are trying to increase their margin per watch just because of, once again, this equation that I'm kind of alluding to, right? This time and effort and capital cost, what does that look like? And so in order for them to try to make it make sense, most dealers and sellers and traders of watches, or that profit somewhere in the supply chain, are looking to increase their margins. They can't do it overseas anymore. So unfortunately, because of the tariffs, this means that they need to buy the watches for less to get a better return on their capital. And if it's a watch that currently has a very low demand, right? Think something like a Girard-Perregaux that had a hot moment, during COVID, but maybe not. This is going to be even worse. If it's a Rolex, sure, there's still people that have a call for it. There's still people buying and selling out there. So, it might not be that bad. But if you get outside these predictable blue chip brands that de-risk or lower the risk in the transaction to try to bring it closer in line with a return, maybe in the stock market or otherwise, this is just what dealers are going to do to try to make the deal make sense for their capital invested. Now, on the flip side, if you're looking to buy a watch, I think it's a decent time, depending where you go, the watch model that you like, who you work with, and a number of factors relating to that, but it really is going to depend on the dealer's specific condition at the time. If they are realizing or they're coming to this aha moment of, why would I sell a watch when I could just dump money in NVIDIA or Palantir? Well, maybe you'll get a better deal on the watch so that they could take that money and they can take that money that they just sold the watch for, put it into some of these alternatives and make a better return. Or maybe they just need to move watches. And today, watch dealers do need to move watches. So if you're on the fence or you're thinking about buying a watch, I think it's a pretty great time, but you are going to have to shop around. Not all the dealers have come around to kind of the changed marketplace or landscape. Many that have been in the business a long, long time, decades, are kind of just waiting it out. They're holding still. They may not negotiate a ton. If the watches were in gold, they saw an increase in the gold value there. So, in terms of, other reasons why maybe it's a good time, it's seemingly a decent time to buy a gold watch. Gold has come down a bit since the shooting of this video, but regardless, if you look at the price of the watch versus the value of the materials, the ratio has improved over time. I think gold is a decent time to buy right now, but time will tell. But I would love to know and hear, what do you think about this? Have you tried to buy a watch recently? Have you sold a watch recently? What are you seeing? What are you getting? I would love to see it and hear it in the comments below. And if you do want to sell a watch, if you post your watch for free on chronograbs.com, I shop it out to our network of dealers that I know pay the most for certain watch brands and models that need these watches. So we should be able to get you the best sale price if you're going to sell to a dealer, and a quick, fast cash offer, so you don't have to wait for tire kickers or people just asking endless questions. Although you could if you'd like to, because private parties could also make you offers. chronograbs.com. So thank you so much, guys. We'll see you next time. You've been chatting with John P.